Hey traders from around the world, what's going on? It's your boy Jeremy Alexander Newsom with Real Life Trading. I hope you're doing absolutely wonderful. So right now we're checking out the SPY. This is the ETF that tracks the S&P 500. And here's kind of my analysis this morning after a really weirdly unexpected gap down. I'm going to go ahead and let you guys know right now, just out the gate, today's candle and yesterday's candle, really the last 2 or 3 candles just have me just totally questioning what the heck is going on right now in the markets. I'm pretty, I had to think about this one for a moment, for a few hours actually. I had to meditate on what I really think the market's going to do. So let's kind of talk about that. This is my analysis from this morning on the gap down. I didn't expect the gap down, but I mentioned I don't expect it to break 206.75, but if it did, it's going to get pretty volatile. So when it broke that level, it actually ran really quickly down towards the low of the day from yesterday and then bounced. Here's your 5-minute chart on the SPY. So again, here's kind of my line in the sand, this 206.75. So when it opened, traded below, retested that strong pivot, failed. Great bearish move right there in the morning. Then towards the low of the day from yesterday, you got some similar candle patterns. So right here is actually a tweezer bottom, and then once it kind of broke above here, a little bit of an inverted head and shoulders pattern on the 5-minute chart. There you go. There's the neckline. There's the retest of the neckline. And then traded right back up to the resistance over the day. So technical analysis prevails again on the SPY. So what's going on? Guys, man, I don't know. Today likely will end up as an inside day candle. We only have 37 minutes left. But this covered call at 213 will expire worthless, and I'll probably end up doing that exact same value, exact same price for July. I'll be hitting you guys up on that one next week. Okay, here's what I think, truly. So there's going to be some support down here. You got the England voting if they're going to be leaving the European Union sometime on the 23rd of June, which is right about here. So it's going to be a pretty important day, I think. So I'm going to mark that with a pink line. And I think we're going to get a flash selling down into that support or into some of these supports on the SPY. So we trade up to a resistance, we're failing resistance, and we're trading lower. Not a massive shocker there. But again, I'm thinking the SPY probably pulls into here slowly but surely, maybe with a giant wick or something down into this 204, 203-ish support. And in this general area, this is where I will look to go long for either a day trade or a swing trade. And then this pattern could form, right? I'm not saying that it will. I'm not saying that we're going to go zero if it does form a head and shoulders, but I will mention that likely if we trade down to that support, that 204-ish area makes sense to bounce. And just for happenstance, the long-term moving averages are down there as well. So if we do trade down to there, we get a big wick from the European, from the Europe vote, from the England vote for Europe, maybe get into a bull put spread or something below these long-term moving averages. So just kind of give you an idea. That's what I think truly on the SPY. And that's what I got. Here's the XLE. XLE, really nice hammer candle on the 50 exponential moving average. There it is, right there. So kind of looking and seeing what's going to happen. And then, at this point, look to buy low, sell high off the 50 exponential moving average. Here's the Q, ticker symbol QQQ. Very strong bullish candle yesterday, guys. And the fact that we're taking out the low of yesterday on the Qs, pretty mind-blowing and not very bullish. Let me just kind of remind you on that. That's not the most bullish signal I've ever seen in my life. So the fact that we're breaking that low, I think a little bit more bearishness is likely going to trickle into the markets here in the next few days. Just my overall thought process. All right, let's go look at some stocks. VRX, ladies and gentlemen, I've said it before, going to say it again. I think VRX goes to zero. Slow trickle down lower. They got a lot of SEC stuff going on, a lot of investigations, a lot of federal researchers into the company and into the bookworks, into the accounting. We were down again today, 0.8%. We were down nicely the other day. You had a bearish retest gap on earnings, formed a white candle, formed a pennant pattern. You're getting a small gap. I'm not saying it's going to be a great trade to go lower, but I'll say it this way. If I am trading VRX bullish, it's with money that I don't really care if I lose. It's very aggressive to trade this one. It's just been getting absolutely pummeled. And for a pharmaceutical company, it's going to take some time for it really regains its strength. At least in my opinion, which doesn't really mean that much on VRX. I don't really trade pharmaceuticals long term. If we're day trading it, great. But for swing trades, I'm staying away from this one. Just letting you know. Apple, big news today. Apple apparently, what was it with China? China orders Apple to stop selling iPhone 6 because there was apparently a lot of similarities between the iPhone 6 and some other phones that China had. So on Apple, this covered call is going to expire worthless today, lowering the dollar cost average on Apple for those who have shares. Some traders did take a sneak peek at some bearish Apple gains today for the day trade. It wasn't really that hard. It was a bearish gap and go of sorts. Didn't clear any pivots, but here's what the 5-minute chart looks like. So on Apple, and just letting you guys know, I didn't personally play this trade, but here it was. So you had a little bit of a pennant pattern this morning. Low of the day, break below of the day, retest, and traded into the pre-market low and bounce. Reason I didn't trade it, the risk reward wasn't that great. It was just a 1-to-1-to-1 risk reward. Would have made an R, didn't happen. The only trade that I took today was actually on SYNA, and we got in bearish on this one, and we actually ended up getting out for break even. So our entry here, stop here. Harry Potter came down and wizarded this one down by about 2 cents, preventing us losing an R. And really just kind of traded all the way sideways, blah, 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 blah. Anyway, ended up getting out for break even. And you can see right now it's pretty much the exact same price we sold it at. So a really good gap on the hourly chart just did not work for a bearish trade. And you know what? That'll happen sometimes. The goal is lose small, win big. Here is Smith & Wesson, ticker symbol SWHC. Had a lot of traders ask me how I would play this one today. Well, here's my analysis. This morning I mentioned I would like an open above 23.89. That did happen. So as it was opening up this morning, we were watching it very, very closely on really the 5 and the 1 minute chart. As soon as Smith & Wesson opened this morning, it started selling, which I found to be very, very interesting. So as it opened up, it started selling. Let's hop over here to the 5-minute chart on it. And really, for the majority of the day, we watched Smith & Wesson, but never found a really good trade setup. So if you didn't trade this one, as good of a gap as it was/is, I just never found a good trade setup. I mean, there's a little bit of a resistance right here. It broke out, and again, the 100 simple moving average on the daily was right about here. So let me kind of go back to the daily chart to kind of show you what that looks like. So here's the daily chart. Let me pull up the long-term moving averages. Here they are. So 2382 was the 100 simple. Bottom line, it was/is a good gap. I do expect some more bullish momentum to come out of this gap. A lot of traders had some put sales on Smith & Wesson for July at 21. So I think it's going to continue higher. It's going to take a little bit of time. But if you did not trade this one, no worries whatsoever. FNSR was another one today that had a really, really good gap. And here was pretty much my analysis from this morning. Here we go. And initially, before market open, it was trading at 1950. So my analysis was, I think FNSR fades into about 19 and then potentially bounces there. Well, realistically, it actually opened at 19. So it opened at a resistance. Resistance, resistance, resistance. So it opened at that pivot, and pretty much as soon as it opened, it did sell off. Now, you did a white candle gapping up, so it was a retest gap. Now, there were better gaps out there. If you wanted to play it, this is one that we were also watching. I did not take this trade. I did not make it official, but it is a pretty classic bullish retest gap, right? White candle gapped up, traded down into the 10 exponential. You get some bullish candles, some bullish volume, a high indecision candle right there at 920 central. Entry, stop. And that trade right there would have netted you about an R. So again, was a decent trade. It wasn't amazing, but that was one of the gaps on the day. Let's look at a few other gaps on the day. Lumber liquidators, ticker symbol LL, up large at one point today, and at the moment up 19%. So this is a pretty decent gap to keep your eyes on as well. Lumber liquidators really in a long-term accumulation phase. If you think about it, since really July, so pretty much a year ago, just a big accumulation phase. Buy low, sell high. It's not really exciting. There's a lot of bearish news on lumber liquidators, but they're kind of breaking through the mold a little bit in regards to the issues that they were having with their lumber and with the regulations and with the rules. Anyway, it's a buy low, sell high. It's a very speculative purchase, no question at all. There's no reason to put all of your eggs into that suitcase. But all I can say is it is a really good support down here at Lumber Liquidators, and today it was a decent gap. So if we come over here to the daily chart, here's your daily chart. Really good volume spike there. It is a retest gap, but we have had many of those in recent occurrences. Lumber Liquidators very, very gappy. So again, I don't have any position at all. Lumber Liquidators, just very speculative. Buy low, sell high, or buy the retest if you're looking to play it. All right. Let's look at one more, which is going to be FAS. And the reason I'm bringing FAS to your attention, this is the 3X financial stock. Now, on Fridays, so actually in about an hour and a half, we're going to do Finance Friday for my swing traders. We're going to be looking at some of our swing trades and some setups on the finance market. So on FAS, this was a very, very bullish gap here and a very, very bullish candle here. So a few weeks ago, I mentioned if we close below 26.85, something is brewing. Well, we did close below there, and I guess this is the definition of brewing. We did trade lower on FAS. Nice little move. It's been very, very strange out there in the markets, especially today. Some really, really weird moves. So remember, cash is a position. You don't have to trade if you don't really feel like there's a really good trade right in front of you. Remember, patience is king. June usually is a slower month, but I am relatively anticipating to look for a buying opportunity sometime after the England vote, which I do not think they leave the European Union, and maybe giving us an opportunity to buy the dip. We'll see. We'll find out. July, though, going to be exciting. I'm excited for July. June, we'll just get that out the way pretty soon. So anyway, there you go. One last update. Foot Locker, ticker symbol FL. We are in this bearish trade. It is working for us. We almost made it to our target, up about an R, and we'll lower that stop a little bit later. Ladies and gentlemen, thanks so much for watching this free Friday real life stock review. Shout outs to all the fathers out there. Happy Father's Day weekend. Sunday is Father's Day. Ladies, kids, it's pretty easy to make fathers happy. You know what they want. Food. Give them food. Give them rest. Give them hugs. Give them love. It's really easy to be a dad, very difficult to be a father. To all the fathers out there, thank you so much for all that you do. Until next time, ladies and gentlemen, love life, live life, and trade it. I will see you Monday. Have a good weekend.